So a range market will show no directional tendency. I mean, because you have to understand this. How do I know? Did the market go into a consolidation already? The beginning portion of a consolidation is tough because you think the market is still trending, yung pala, it's already gotten stuck. It's already feeling some quicksand, and many people don't even know about it yet. So the basic sense of it is that it's going to start moving sideways. In a case like this, you'll probably see prices moving from the bottom of this range, climbing all the way up here, and then you will feel your first high. Then it starts to pull back. Normally, in a strong uptrend, that's a particular top-ish movement. But in the first pullback, you will know how these ranges come in, because normally the first thing it does is the first correction is deeper, usually deeper than all the other corrections you've seen earlier. Right? Then, as the range starts to flesh itself out, you will know when the first high, second, and the first low come up, you'll get an idea what the low and high range is, and then you start drafting, write your lines from the bottom and the high bands of it to be able to draw out your resistance and support. Okay, for the benefit of the people who don't know what that is, resistance is an area above the market that shows a lot of heavy selling. People want to sell at that price. And if there's a lot of people selling on that top-ish price, or in that particular high, let's say we're talking about the high like this one up here, that means there's a crowd out there who believes the price is right. It's time to sell. And they start selling their position. And that act of selling that they're doing is creating the hindrance in the price. That's what resistance is. If there's 10 of you in here who started, and 10 of you, like you functioned earlier on, let's say the first people here start selling. And then the people behind you say, oops, parang ayaw na umakyat ito ah. And then they say, oh sige, ako na rin magbebenta. As time goes on and you guys continue that, you start to convince a greater portion of the crowd to believe what you believe, and now they start selling, and all of the next thing you know, you have a major selling force standing in that line. That's what resistance is, the willingness for the crowd to sell. And that's why it creates a top. Then the stock price falls down to the bottom you see here, and the bottom, it starts to recover. What initiated that? Now there are people who are now believing, that looks like a good price already, let's try doing some buying. And as you start doing some buying, the people behind you see that it doesn't want to fall down anymore, and they say, oops, maybe it's time for me to buy as well. And all of you now start switching, and you become more supportive of the price. That's why we call it support. And now there's an encouragement for prices to be able to rebound. If you see evidence of that twice, 3 times in a row, it's very clear to you that those ranges become very strong ranges to be able to use. If possible, you will be buying on the low and selling onto the high end of that range. But sometimes, those ranges may not be as flat as what you see at the first situation. Sometimes you'll see a more graduated approach. Okay? When gradual, it could be more channel-like, going up this way. And so you don't think that you'll be able to buy all the way back at the low. You will only know that once you have your second low appear. But you have to be prepared just in case they do. In today's environment, as I'm already telling you what's going to happen, you'll probably see more patterns that look like that. So be very much sensitive to those types of situations now. But there's a third. There's a situation where the range of the consolidation you're looking at will start to narrow. They will start to come towards each other. And the reason that happens is because the amount of shares that either want to be sold or bought, as a pattern completes itself, becomes smaller and smaller and smaller. And many times you will see ranges start to narrow this way. Once a pattern starts to become very narrow already, you're almost asking for prices to push itself above or beyond that particular price. And that's why we become more sensitive to a potential, we call breakout scenario, which I will also teach you in a while. So roughly you will see these particular types of calibrations in terms of the patterns we are going to be using today. So one of the reasons that you would see that a potential range has come in is a drop in activity. You will see that once patterns get used to going up and down, the crowd becomes disinterested. And as they don't want to participate anymore, they automatically stop buying. So those people who are not making money in there will probably not sell. They're just going to try to wait it out. So if the buyer doesn't want to do anything and the seller wants to keep himself quiet until the next opportunity, automatically the volume or the number of shares that trade in a stock in a day will start to gradually diminish. Nice thing about that is as the volume levels start to diminish, when you see that the volume levels, for example, in this area here, start to become relatively small already, and that tells you that sleeping giant is getting ready to wake up. Because there's no more shares to be had. If I'm a buyer and a seller, and I want to buy or sell in any grand way, the only way I can do that, if I'm a buyer, I will have to look for the people who want to sell at a higher price. Because nobody wants to sell in there anymore. If I'm a seller and I cannot find buyers in that range, I have no choice. I'm going to have to smash that stock down to be able to get out because nobody wants to buy the price from me anymore. So a drop in volume is a potentially positive thing, positive in the sense that it's telling you that the range is getting ready to end. Okay? Second, I'll introduce an indicator to you today. Some of you may know this already, but there is an indicator out there called the DMI. Now, the DMI has an indicator inside it called an ADX. The ADX is the line that you see here that I've drawn. That's this line you see here. Oops. Okay, this line that you see here in the bottom. Think of it this way. It's like a temperature gauge as well. That particular indicator simply measures this. It checks to see whether your market has force or doesn't have force. It's not telling you direction. It's only telling you, malakas ba yung movement nito or medyo mabagal. If the ADX reading is below 25, that means you're more likely in a ranged environment because you're very slow momentum-based market here. If the ADX is above 25, particularly above 30, then that means you are in a momentum situation. That means malakas yung sipa nito. So if you see a stock and you're seeing below 25 readings in ADX, more likely you are in a range situation, and channels are your best option here, if not flat movements into your market. That way you have a cheat sheet. You can tell right away whether this stock will be a runner or whether it'll be a cascading move. Just look at your ADX.